Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be providing an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. This is actually a fairly interesting weekly close for Bitcoin. I believe it's the first time Bitcoin has closed below the bull market support band on a weekly close that wasn't in the third quarter of the year. For instance, at least this cycle. If you look at last year, there were some closes below it, but it was all in the third quarter of the year. The cycle before, right? This was mostly just the third quarter of the year, maybe early October, but really the third quarter. There had been some wicks below the 20-week SMA in other times, but never really a weekly close below it. So this is deviating from what we have seen in the past. Right? This is a different trend that we've seen. And we talked some about, markets de-risking on the other side of inauguration because of the pricing in of perfection, if you will. One of the things that we have discussed is this running 1-year ROI. And you can see that because Bitcoin was unable to start really moving in February and March, the 1-year ROI is starting to decay a lot, which is really different than what happened in 2017, right? In 2017, the 1-year ROI continued to go up in January and February and March. Whereas this cycle, it's actually been going down. Now, what's really interesting when you look at the cycle ROI of Bitcoin, if you just go look at the ROI from the low, if I can find it, if you look at the ROI from the low and compare this cycle to the 2016 cycle, we have seen Bitcoin now fall below it. Now, this always makes sense because of the idea of diminishing returns. Now, if you measure it from the peak and you go peak to peak and look at this cycle compared to the 2016 cycle, the current cycle is actually still outperforming the 2016 to 2017 cycle. At this point in the 2016 to 2017 cycle, Bitcoin was actually at its prior all-time high. You can see this, right? The peak ROI, if you look on the screen right here, the peak ROI, or peak to peak, it was at 1, whereas right now in this cycle, it's 1.29. So what I'm suggesting is that Bitcoin could go as low as 69K, the price, the peak from the prior cycle in the short term, and it would still be tracking the 2016 to 2017 cycle. In fact, if you look at Bitcoin in early 2017, one of the things it actually did was it tested the 2016 high in January. Now, it also saw some weakness in March as well, right? There was weakness in January, and then there was weakness again in March. Now, the March weakness back in 2017 is something we're also seeing this cycle. But we called for this, right? We said, look, between February options expiration and March options expiration, the S&P 500 is likely going to experience a lot of weakness. And because of that, we'll likely see Bitcoin experience weakness too. If you look at the year-to-date ROI of Bitcoin in 2025 compared to 2017, you can see there was weakness in January, and then there was weakness in March. The main difference between this year and 2017 is that at least in 2017, there was some strength in February, whereas we didn't really get any strength in February this time. So this was always a period of weakness for Bitcoin, right? I mean, maybe not always, but the stock market generally is weak in the early part of post-election years, right? If you just look at the year-to-date ROI of the S&P 500 in 2025 and compare it to the average of all prior pre or post-election years going back to 1928, it's kind of a weak time for the stock market. Now, obviously, there's recession fears, right? You have the Atlanta Fed, forecasting negative GDP, but at the end of the day, it's generally a weak time for stocks, and if it's weak time for stocks, it's usually going to be a weak time for Bitcoin. I mean, if you look at Bitcoin, we can come up with all sorts of narratives, but the most likely explanation for why is Bitcoin down is because the stock market is down. And you have to remember that the stock market has essentially given back all of its post-election result gains from back in early November. And Bitcoin has not yet done that. But if it did, it would involve going back to around 68 to 69K, which is the prior all-time high. Which again, peak-to-peak ROI was where the 2016-2017 cycle was at this point in the cycle. Now, I have said that you really don't want to see Bitcoin go below 70K. If it does, there's a good chance that the peak is already in for the cycle. If you look at what happened in 2017, when it tested the 2016 high, it actually wicked below it a little bit, right? About 5% below it. This cycle, 5% below the 2024 high would actually be right around 69K, which is, again, the prior all-time high from the prior cycle. So I would say, if you had a wick to 69K and that was it, and then Bitcoin started to look constructive again further out into the year, then there's still a chance that you get that right translated cycle. What I would not want to see for Bitcoin, I would not want to see it go down here, right? If it goes down to the low 60s, like 62 to 63K, where it basically back tests this trend line, if it goes that low, then I would argue that you would get a big bounce, but it would probably be a macro lower high and the cycle would be over. If it can sort of hold above 73K or even just a small wick below it, and then we can get back to more favorable times out in, other months, right? Again, the January to March and post-election years really isn't that great for stocks. So once you get out into April, it can generally pick up a little bit. Then I think you would see a renewed interest. Now, whether it leads to an all-time high or not, or it's just a counter-trend rally to a lower high, I think depends on how low Bitcoin goes before we get out of this window of weakness, right? So basically the idea is that Bitcoin's in a window of weakness until March options expiration. And I mean, it could theoretically extend into early April to the labor market print, but it's in this window of weakness, I think, for at least the next 2 weeks. And how low Bitcoin goes in those 2 weeks will probably dictate whether it's a right translated cycle or a left translated cycle. And I can come up with all sorts of evidence for either case, but again, I think it's going to dictate how low it goes will dictate whether the cycle is over or not. Low 60s, not good. A wick below 73K is still okay, but it needs to just be a wick. So if you want to operate deterministically, which is pretty dangerous to do, then that's at least how I would operate deterministically in that sense, right? 60s, the low 60s, probably the cycle's over. A little below 73K on a wick, still business as usual. And it's easy. I mean, we've talked a lot about left translated cycles, right? We did this whole video on the QQQ comparison, and I know that it's kind of a scary chart, and I only put it in front of you because I imagine someone wished in 2000, and or in 2000, I wonder, I bet you people wish that someone had showed them that was going to be the top, right? 54 weeks after the ETF launch for the QQQ, and then you basically had a long wick down, and then the next week you had a big candle body down. That drop occurred in April. For Bitcoin, this was a little bit of a deviation, right? Because I mean, the second drop, right? You had sort of a long wick down, but the second drop it didn't actually overtake the wick. Whereas with the QQQ, it did overtake the wick back then. So again, we've talked about, you want to see a divergence so that it doesn't necessarily play out the same way. This shows you what a macro lower high would look like, right? A long wick down. This actually went to 63. And then a multi-month counter trend rally to a lower high into a recession, right? So you look for those deviations to see, does it change? Unfortunately, there still is a window of weakness for Bitcoin, at least for the next couple of weeks. And so it doesn't mean this can't happen. It could still be in front of us. So that's what I'm thinking right now with regards to Bitcoin. It's in the low 80s. If it can get through the rest of the month in the low 80s, then I would probably bode pretty well. But still a couple of weeks to go. And, this is the first drop here below the bull market support band. If I weren't looking at really any other asset class, and I was just trying to figure out what does this look the most like to me, what it looks the most like to me, especially through the lens of monetary policy, is what happened right here, where you had sort of a drop down and then it kind of consolidated for a while and then went back up to a lower high, consolidated a little bit more, and then you can kind of ultimately see what the cycle did. The reason why it kind of feels like that to me is because if you look at Ethereum and you look at sort of this higher low rally back in 2019 and compare it to this higher low rally this cycle, all, by the way, during quantitative tightening. This was, right, if you look here, this was during quantitative tightening, and then this was during quantitative tightening. It looks like ETH is sort of breaking down right now, right, sort of how it broke down back then. And during this breakdown by ETH back then, it sort of was just before the end of quantitative tightening. That's when Bitcoin got this drop below its bull market support band. And you could even see back then, especially if you look at it without the wicks and stuff, you just look at like sort of a line chart, this double top there kind of looks like this double top right here, right? And then it goes back down, and then it gets this drop below the bull market support band, goes back up into a lower high, and then a lower low, and then you sort of get your pre-recession rally, and then the recession hit. So I'm kind of like viewing it through that lens at the current time. But I just want to give a few thoughts. I'm not going to go on and on. I mean, obviously a drop below the bull market support band isn't really that great for Bitcoin because now it has to do a lot of work just to get above it. And right now, the 20-week SMA is all the way up at 93.5K, basically. The 21-week EMA is a little bit lower at 88.7. But still, I mean, Bitcoin would have a lot of work to do just to get back up to those levels. And so certainly it has entered into this window of weakness that we've talked about between February options expiration and March options expiration. I mean, I think the most likely answer for why is Bitcoin down is just because the S&P is down. If anything, Bitcoin has been holding up better than the S&P because the S&P has given back all its prior or it's all its post-election result gains, whereas Bitcoin hasn't. It doesn't mean Bitcoin won't. It just means that Bitcoin likes to hold on for as long as possible until it can't possibly hold on any longer, and then it'll get larger drops than other parts of the market, like the S&P, because, well, the S&P already had that drop. Those are my views, guys. We're going to wrap it up there. Thank you for tuning in. Make sure you subscribe, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. See you guys next time.